All right, what's going on, guys? Edward here, back with another video. And I wanted to take the time, in this case, for starters, for beginners, for people who perhaps want to start building up your own strategy. I think I actually have a video like this in the past. Uh, it's got to be somewhere around like last year, but I want to make a new one specifying and maybe try to give you a bit more tips on how to build up your strategy. Okay, using, in this case, I'm going to be using simple moving averages. Okay, um, I will show you, like, for example, right here, this is the indicator that I'm using. Right, it's basically called like this. You're just going to type in here simple moving averages, like that. This is the creator. Right, this indicator comes with a bunch of lines, right? Bunch of lines. We're going to be using, in this case, three. Okay. Now, at the moment, the purple line, that's the 200 period moving average, as you can see. I like this period moving average for starters because it's a good trend indicator. You know that moving averages, doesn't matter, whatever it is, if it's a simple moving average, if it's exponential or weighted moving average, they are all trend indicators. It means that when the price is above the moving average, it means that we should be looking for buys. And when the price is below, we should be looking for sales. But be careful. Don't misunderstand this thing, because when I was a beginner, a friend of mine told me, yo, man, did you know that if you use this line on the chart, you can go buy? If the price is above the line, it means it's a buy. And when the price is below, it means it's a sale. And I was like, holy shit, I'm going to get rich in a week. Right? So I was thinking all this crap and thinking that it's actually possible, but it doesn't work like that in reality. So you shouldn't be buying just because the price is above the moving average, or selling because it's below. Okay, you got to have a plan. You have to understand price action. Okay, price action is key right here. Before you even start using an indicator, price action is key. Uh, you should know price action before even touching a single indicator. Okay, what price action is? Basically knowing where support and resistance is when the price breaks, right? How the market moves. The market moves in waves. Okay, and impulse and correction, and so on. Right? Maybe it turns out to be switching now and it starts going into a bearish downtrend. Right? All of this stuff you have to understand before you start using this thing. Right? Let's suppose you already know that. You already know price action. Right? So you want to start creating your own strategy. Okay? And this quick example, it should help. All right? So what I'm using, and by the way, I'm on Nasdaq right here, right now. You can see I like the 200 period moving average because it's a good indicator, trend line indicator. And you can see, like, and why I love trading Nasdaq, especially Nasdaq, because it normally follows a trend. If it's either to the upside or to the downside, it follows very, very well. So right now, you can clearly see all this big crash that we're currently having, right? This is inflation, war in Ukraine, all this crap that happened in 2022. We have it right here, right? The price, this was coronavirus when it exploded for the first time. And look at how Nasdaq stayed above that 200 period moving average for 643 days, right? Beautiful. You could literally buy and just hold. As long as the price stays above the 200 moving average, you can just hold. Just can keep holding. But because of this huge crash and this big shift in direction that we're currently having, and we are now on a downtrend, huge downtrend. And you can clearly see here that we're not even close to that moving average to say that, oh, okay, this is definitely the bottom of the downtrend. No, the market can simply just continue down to the downside. We don't see the first sign on the daily time frame. We don't see the first sign, which is we have to see some sort of break of the structure, break of this moving average to the upside. We are not seeing that yet, right? Like it happened here. The market did last for a couple of days, even a couple of months, I would say, below, and then started breaking, and it never came back down. So it just started gaining strength and strength and strength, and it just kept like that pretty much for 600 and something, for almost 2 years, more than 2 years. So with that being said, right, I like the 200 period moving average, so I'm going to use it for this example. Right now, let's go ahead and try to use. I want to use three indicators in this case, starting with the 20, 50, and the 200. Okay, so I'm going to select those three. And from here, this is where I'm going to start building up. So basically, let's say for example, doesn't matter what time frame you are, okay? Whatever time frame you spot it, this is what you're going to stick. So what you really want to find out is once the whole, like the three candles, the three moving averages align, basically, you want to see the markets, like for example, the blue line is the 20 at this point, is the 20 moving average. The green line is the 50 moving average, right? You want to see all of the lines lined up. Like you want to see everything pointing to the downside. Like this is the blue right here. It means that you are below the 20. You're also below the 50, right? But you should not be selling right here. You have to wait for the market to be below the actual purple line as well. You want to see the market below the three lines before you start thinking about selling. Okay, that already there, it's actually a good scenario. But like right here, what happened right here? You see the price actually was above the blue line and the green line, and even right here started breaking. Even this one started breaking to the upside. But what happened? Boom, break to the downside, came back down, maybe stopping you out right here, or if not, somewhere here. If you decided to get in just because the price is breaking, right? So we have to be careful with this type of things. Um, I want to look for, let's try to go maybe on 15 minutes now, see if I can find a better example. I want to look for the crossover. When they cross over and break the actual trend line, I was actually interested in testing and changing these lines. Like, let's see. So the 50, hold on. The 50 is the green. Okay. So let me see if I can maybe put 14. A lot closer. Okay. So I placed a 14 moving average. You see, it sticks more to the body. I'm sorry, to the candles. So sticking more to the candles. I like when they're stick to the candles because that can also give me an early sign of closing my profit. Uh, 10, 10 moving average. It's even closer, right? Very close. What I'm trying to show you here, guys, is I'm trying to look for. I already have my big moving average, okay, which is the 200 period, right? But now I'm looking for two short moving averages, okay, fastest moving averages that I can stick to, that I can actually follow, right? And I'll show you some examples right here. Maybe the 8 that I showed, 8 and 14. Yeah, let me try the 8 and the 14 because they are more much closer to the candles. Well, these days have been very very choppy, but let's see. Yeah, for example, in this little buy right here, market actually broke above, right? Very strong break. This candle, I'm gonna mark it up. So this candle right here broke. Let's say you wanted to get in there. Your stop loss would normally go, depending on the position. I will show you some examples, but depending on the entry, it normally goes below that candle, or if you want to place it below the moving averages, okay, below these two lines, just below, right there, right? You can go for a 1 to 2, 1 to 3 risk to reward. Let's say you want to go for the 1 to 2. Don't start greedy. Try testing out this thing first, okay, before you actually start jumping into this thing, right? You can follow this way, right? I follow a simple rule, which is basically once price is halfway up, you can put this thing on break even, take partial profits, or you can even, make the decision. Okay, once this line starts crossing over, maybe that's a sign for you to get out of the trade. Okay, or to even consider maybe they start crossing over. Okay, that's the point when I'm going to put it on break even. Okay, please don't forget this. This what I'm already telling you. It's how you should be doing it. All right, just like this. Now let's go. When you see things like this, when the market is very They say there's a lot of volatility. Just be careful. Maybe don't trade this type of things. All right. You want to see something clear, something very clean. Like right here, this break is not much. You see, normally when the market is approaching the 200 period moving average, you might see some a lot of momentum, right? Because normally breaks, so it's most likely changing the direction or shifting, and it's very aggressive. So be careful with those type of things. Of course, I'm showing you this example on Nasdaq, of course, as well. And Nasdaq, it's an indice that is very aggressive. So, for example, on a break like this, you see the market was below. You understand the structure. The market was actually on a very strong support here. Didn't want it to break below, and instead, I think this was New York on 330. This was must have been some sort of news right here. I think this was the actual NFP. Yeah, it was some sort of news right there. So your entry would have been there. Your stop, in this case, you put it below that candle. Okay, below that candle right there, and you go 1 to 2. Okay, you see, I'm actually using the moving average to follow. Right, I want to see the in this case on a buy. I want to see the blue line above the green line. The blue is the shortest line, the 8. Okay, period. The 14 is the green, and of course, I know I'm on a big uptrend, or at least this uptrend will last for a little longer because I'm above the 200 period moving average now. Okay, so I should be feeling very confident. I can even continue holding this thing until they start crossing over, which is somewhere about here. So you see, I could even hold it for a little longer than that. So that's something you're looking. Let's say you wanted so bad to get into this sell. I mean, it's up to you. If you don't see maybe much volume, it's up to you. As long as you're seeing the structure, what is currently happening. Okay, there was a support and a resistance right here. I actually see the price broke, like kind of like a retested right here, and it started breaking to the downside. So you wanted to get in on a short position, maybe with this candle, placing the stop right there above the moving averages. Coincidentally, it's above the actual candle right there. So okay, and you want to go with a 1 to 2, right? Or you want to hold and watch those two moving averages. Okay, as soon as they cross over, that's when you get scared. Okay, you got scared here. They did cross over, so okay, you closed it there. Fine, you took a nice 1 to 6 right there. Okay, this bot, the body of the candles. Don't get too excited. You have to wait for the body of the candles to close. You got excited here thinking that it was going to break. You see, boom, it retraced, most likely stopping you out. So you have to wait for the candle to close. All right. In this case, we have another crossover right here, but let's see what is happening because I want to understand price action. I want to see what price action is doing and where the market is. Aha. I see a very strong support here. Market does not want to break this low. So that's, I know that I'm on a nice support. So I'm looking for the buys now. So what happens? Price breaks above right here. Boom, that's a break. The stop, as I mentioned, below the moving average in this case is right here. And coincidentally is below the actual candle. So I can go there for that 1 to 2. Or hold it until they cross over, which was right here. You can use those two moving averages to do it, right? Now, that's how this is looking right now, right? With the 8 and the 14 and the 200 moving average. But let's play around because that's what it's about. You have to you can actually switch these moving averages. You don't necessarily have to use the 8 and the 14. You can keep moving here and see what works best for you. Let's see how the 10 would look like. Of course, it's a little further away. You see that by the time, let's see, by the time breaks here, the market breaks here, the blue line is still not above the green line. So it's not a good sign. Like it's starting to cross over right here. The actual crossover is happening right here. So I'm actually looking for that. The 8, let me see if the 8 was actually telling me. Let me see. So, okay, we're above. No, it was actually also below. Yeah, I didn't see that. But yeah, it's also below. Let's see what other moving average I can use right there. So Let's see, because you have to test, you have to do, if you really want to, build up your own strategy, this is how we do it. You start seeing, like for example, right here in this point, let me see if it changes now. Okay, so 16, it's not 16. Let's go back to the 20. Okay, so 20 is right there. Let's see the 30. I never used the 30. The 30. Okay, well now the 30 is right there. So 8, 30. Oh no, I have used the 30, but on the TP strategy. But okay, at least right now we see that the blue line is above the green line right now, and now boom, it breaks above. Okay, so now it's above. The price is above also the actual 200 period moving average. So this one may also work, right? It's just that maybe the crossover is happening a lot later right here. You see, so it depends which you want to use. That's why you have to do lots of backtesting. Like right here in this case, you see that candle broke right here. Okay, this candle was the break. So you would have to put, let me see, not on a short, on a buy, right here. Your stop loss would have been here. Your take profit 1 to 2, right? Market at least reach halfway up, and then stopping you out on break even. But this is where it's telling me to place the stop loss. Let's see what was it? This one, the 14, 8 and the 14. Aha, yeah, it's basically the same. Yeah, it's basically the same because the stop is going right, like right here. It has to be below the moving average. Let's go shorter. Let's go shorter. Maybe a 6 and a 10. I don't know. Yeah, they did move a little closer, but still the stop loss still being the same. Maybe a little shorter right there. 1 to 2. Yeah, I think it would still be the same. But understand, guys, that as long as they are crossing over, they are bullish. Okay, these two little lines, all right, they are telling you to go buy, and finally breaks the 200. That's your trigger. Like that's basically the entry. Once it breaks the final line, which is the 200, right? If you want to go now for the sale, same thing. Let's say you want to go for the sale here, which I mean, when you see something like this, market just going up and now below again that 200 period moving average, that could mean the market is just very volatile. Be careful, stay out. Maybe just look into another pair, maybe look into another currency or something, but try not to just get involved into this thing. The 200 period movement is the biggest, right? So you don't want to see crossing it over all the time. If you start seeing all this zigzag movement, stay out. Okay, just simply ignore it. Just go somewhere else. Break in this case right here, right? Boom, that break, the stop above the moving average. You want to put it above that candle. It's fine. The 1 to 2 risk to reward. Let's see if it reached it. It did, but it took some time, right? But at least you're following, right? Once you're halfway down, you should be on break even of the stops. But that's basically how we build a strategy, just testing and understanding that, okay, I know that we're also breaking the structure. If you're following the structure, it's even better because now you're following your price action, right? Which is normally a retail trader would get into the trade, the break of the trend line right there. They place the stop loss here and maybe they go for the 1 to 2, right? But that's basically how you can do it. But now implementing the actual moving averages, right? So you see, coincidentally, they are doing that. So pay attention first to the price action, and then you start implementing moving averages. You start playing around with the numbers. That way, you will find the best thing for you, the best crossover, when to get out, when to get in, all of that stuff. But it's that simple, guys. This is basically how I did at the beginning to build up my strategies. If you find this helpful, please give it a big thumbs up, and I will see you guys in the next video. Take it easy, guys.